Good day Forex trader. Your USD Forex signal, rising to test $1.1368. Today's your USD signals. Risk 0.75%. Trades must be taken between 8 a.m. and 5 p.m. London time today only. Short trade ideas. Short entry following a bearish price action reversal on the H1 time frame immediately upon the next touch of $1.1368 or $1.1418. Put the stop loss 1 pip above the local swing high. Adjust the stop loss to break even once the trade is 20 pips in profit. Remove 50% of the position as profit when the price reaches 50 pips in profit and leave the remainder of the position to run. Long trade idea. Long entry following a bullish price action reversal on the H1 time frame immediately upon the next touch of $1.1279. Put the stop loss 1 pip below the local swing low. Adjust the stop loss to break even once the trade is 20 pips in profit. Remove 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to ride. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. Your USD analysis. I wrote in my previous forecast on Tuesday last week that the price had descended to the pivotal point of the support level confluent with the round number at $1.1400. I thought the price would either break down or bounce, giving an opportunity for a trade in either direction, with a long trade having the most potential. This was a great call as $1.1400 held that day, giving a profitable long trade entry. Markets in general have been overtaken by sentiment regarding the Russia/Ukraine crisis. When a Russian invasion looks more likely, risk assets fall, and vice versa. This increasing crisis in recent days saw the US dollar gain and push the price down, while in its absence, I think the price would have continued rising. This pair is not the one most affected by the Ukraine crisis, however. The Australian dollar continues to be the key risk barometer currency in Forex. The bottom line is that the continuing crisis can push the price up or down and override any technical factors, making trading potentially very profitable but also somewhat dangerous. Technically, the price right now has been rising quite firmly to reach the key resistance level at $1.1368, which is continuing to hold as we approach the London Open. This level looks very likely to be pivotal today. If we get a strong reversal quickly from this level, that will give an attractive short trade entry. If we get 2 consecutive higher hourly closes above $1.1368 after the London Open, we will likely see the price continue to rise to at least $1.1418. GBP USD Forex signal, extremely bearish below 1.3495. A more bearish signal will happen when the pair moves below the support at 1.3495. Bearish view. Set a sell stop at 1.3495 and a take profit at 1.3400. Add a stop loss at 1.3560. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.3545 and a take profit at 1.3600. Add a stop loss at 1.3480. The GBP USD pair wavered in the evening session as investors reacted to the good news from Russia and as traders waited for the upcoming UK inflation data. It is trading at 1.3535, which is a few points above Monday's low of 1.3486. UK inflation data ahead. On Tuesday, the UK published relatively strong jobs numbers. According to the Office of National Statistics, the country's unemployment rate held steady at about 4.1% in December. That rate is slightly above where it was before the pandemic started. Redundancies have fallen while wage growth has done well. On Wednesday, the ONS will publish another important economic number that will provide hints about the Bank of England, BO. Economists expect the data to show that the headline CPI declined from 0.5% in December to -0.2% in January. On a year-on-year basis, the data is expected to show that the CPI held steady above 5.4%. Meanwhile, analysts believe that the core CPI declined to -0.4% on a MOM basis and then rose slightly to 4.3% on a YoY basis. Analysts expect that the BOE will deliver a few more hikes this year. According to ING, most analysts see the bank delivering about 6 hikes. However, in their assessment, they see the BOE implementing about 3 hikes this year. The next key catalyst for the GBP-USD pair will be the American retail sales numbers. Despite the rising prices, analysts are upbeat about sales. For example, the median estimate is that sales rose to 2% in January after falling by 1.9% in the previous month. They also see the core retail sales rising to 0.8%. The US will also publish the latest industrial and manufacturing production data. GBP-USD forecast. The GBP-USD pair declined to a low of 1.3485 on Tuesday and then paired the losses to 1.3525. On the 4-hour chart, the pair managed to move below the lower side of Andrew's pitchfork and the 38.2% Fibonacci retracement level. It also moved below the 25-day and 50-day exponential moving averages, while the MACD has moved slightly below the neutral level. It is also slightly above the yellow support line. Therefore, a more bearish signal will happen when the pair moves below the support at 1.3495. If this happens, the next point to watch will be at the 50% retracement at 1.3435. AUD-USD Forex signal, inverted HNS signals move above 0.7200. The pair will likely keep rising as bulls target the key resistance level at about 0.7200. Bullish view. Buy the AUD-USD pair and set a take profit at 0.7200. Add a stop loss at 0.7080. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 0.7120 and a take profit at 0.7050. Add a stop loss at 0.7220. The AUD-USD pair was in a tight range after the strong American producer inflation data and after optimism about Ukraine. It is trading at 0.7140, which is a few points above this week's low of 0.7087. Risk on sentiment. The AUD-USD pair tilted higher as investors embraced a risk-on sentiment in the market after Russia started pulling troops from its border with Ukraine. The move was seen as the start of the de-escalation process. However, it is too early to tell considering that Russia has more than 100,000 troops close to the border and in the Baltic Sea. Still, signs of de-escalation were enough to lead to a risk-on sentiment in the market. The US dollar index and gold declined while stocks rose sharply. The AUD-USD pair even after the US published strong producer inflation data. The numbers revealed that the country's headline PPI remained at an elevated level. It rose by 9.7% in January after rising by 9.8% in the previous month. The core PPI rose by 8.3%. These numbers reinforce the view that the Fed will sound more hawkish in the coming meetings. Later today, the main catalyst for the pair will be the latest US retail sales numbers. Economists expect that sales did well in December after they dropped in the previous month. Precisely, they see the headline sales rising by 2% in January after crashing by 1.9% in the previous month. They also expect that the core sales rose by 0.8% in January. If analysts are accurate, these will be strong numbers considering that prices remain strong. Last week, data by the Bureau of Labor Statistics, BLS, showed that the headline inflation rose to a 40-year high of 7.5%. AUD-USD forecast. The 4-hour chart shows that the AUD-USD pair has been in a narrow range in the past few days. The pair is trading at 0.7142, where it has been in the past few hours. As a result, the pair is along the 25-day and 50-day moving averages. A closer look shows that the pair has formed an inverted head and shoulders pattern, which is usually a bullish sign. The current price is also at the lowest level since January 7th. Therefore, the pair will likely keep rising as bulls target the key resistance level at about 0.7200.